Hello and welcome back again to the analysis of DXY dollar index. My name is Vic. Thanks for joining me here. I've not been posting much because I've been on extended holidays. I'm still on holidays, but I decided to just spare some time to post an update on what's happening on DXY and a few other markets. So let's see what DXY has been doing. Um, in the last analysis, if you have been following my analysis, you know that we have been bullish on dollar against all other analysts and media reports and everything, and the dollar has been going up as expected. So let me give you a little brief recap on what has been happening. Remember, this was corona time, like COVID-19 was declared here, and dollar started to fall back down here. And at around this point, we started to look for bullish move, because market reached this particular stage, this previous support level here. And at the same time, there was an M pattern inside. And when M pattern completes, the market goes up. So because of those reasons, we have been bullish on the dollar. Now, if you focus on just the local structure here, the dollar actually fell down here to this level, went up and created a double bottom sort of structure, and then started to go up. Around this point, we started to have our bullish move on the dollar, and since then the dollar has not stopped. It has had some of the very nice parabolic moves here, and it continued to run higher. Now, why we were expecting it to go much higher where it is right now, and in fact it can go still higher, is because of this reason. I have already covered this several times in previous analysis. You see, if I look at the multi-year analysis, multi-year structure of dollar, what I could see that market was actually creating a W pattern, and this W pattern is about to get completed. Now we'll talk about that in a second when we look at the other chart of dollar index. But you see, when we were here, there was a very good chance that market could go back up. Why? Because this W pattern was not completed yet. And besides that, this was simply a ranging market. Right? So for several months or years, it continued to stay in this range. When it reached the bottom of this range, it got pushed back up. And I said, if the market actually breaks through this range, then market was going to go higher to complete that W pattern. Now, what you will notice here, that market broke through that range around here, and in that process it actually created a little bearish candle here. Then this is the breakout candle. The market broke out of this structure here, this ranging structure, and the market is continually, it has been going up. I'm looking at monthly time frame. So July month has been bullish, and towards the end of the month it started to take a little bit of bearish turn. Why? Because it is very close to complete that W pattern that we have been talking about. Okay, so let's look at what the analysis was. So if I open that, you might have seen this picture by now, hundreds of times, because we have been following only this picture for a long time now. So around here, everybody was saying that the dollar was dying here, but since then, and we have been bullish here uh, from that point, because majority of the media articles, majority of these things are actually put into the public domain to make sure that market actually moves in the opposite direction. So when you hear media talking about one particular thing, when they have strong bias towards one thing, be very very careful, start thinking alternatively. Right, so the market came into this FCP zone, now it started to come back down a little bit, because that is initial reaction of FCP zone. The students who have gone through the FCP training, they will understand what I mean by the initial reaction. Market has been actually coming back down here, and I'm looking at 3 months time frame. If I go to the monthly time frame, this is what has happened. The market broke through this range, multi-year range, went gave us a breakout, and then started to come to the FCP zone. When it reached the FCP zone, it started to come back down a little bit, and this is what has happened. Right, that's the power of FCP zone, right? The market came here, started to come down. So what can we expect now? Before we go there, let's look at What I'm Research. Now, on What I'm Research, if you're a subscriber, then you know how to read this. But let me show you what we can see. So we are still bullish because we have blue here on monthly time frame. This is blue, This is blue. Everything is bullish, even though for last couple of weeks it has been going down, but on monthly time frame it is still bullish. So we should still be looking for bullish movements into this. If you're looking for longer term trades, or if you're looking for swing trading. Now, if I go to the weekly time frame, after that on weekly time frame, the market has started to come has become a little bearish here because we have got red, but we do not have a red here. And at the same time, what you will notice that we have a trend line here like this, which means that next week or so the market can be bullish. If it does not become bullish, then, and if it turns out to be a bearish candle for the next week, the week after is quite possibly is going to be a bullish one to go back up and retest this particular line. But I'm expecting next week to be bullish, and if more bullish momentum comes in this market, then it's quite possible that market will probably go higher than the previous high, somewhere around here, deeper into our FCP zone, which is here around 110 or so. So what I'm expecting is that if this trend line is held, then the market can create a divergence sort of double top sort of thing. Now, because we are in FCP zone here, we will be in FCP zone here. We will not be looking for long trades on DXY, which also means that even if you're not trading DXY, you can interpret that into your respective market. For example, if you think that dollar is going to go down, that means that dollar based currency pairs such as GBP USD, INR USD, Euro USD, AUD USD, all of these are going to go up because they are opposite to dollar, right? So if we are in FCP zone, this can act as resistance, which means that market can go down. So if I'm looking for bullish move, because the monthly and weekly are bullish, sorry, monthly is bullish, what I will do is I will see whether market respects this trend line or not. If it does next week, I can take a long position, but I will not try to hold it for a long period of time. I will try to hold it as soon as it reaches this FCP zone, I will try to take my profits, because when it has reached the FCP zone, there's a good possibility that it will fall down. Why? Because this is where our W pattern also completes. Sorry, this W pattern also completes, and when W pattern completes, the market is going to go down. So this is what we have. If I see that trend line getting respected, then I will take the long position and I will hold it until it reaches the FCP zone, deeper into FCP zone once again, and that's it. Then I'll probably look for short positions. However, if the dollar actually continues to go beyond 110, and if I see a confirmation above 110, then I will look for a long position again into 113.482. And if that is also broken, then we are looking for a very good long-term move of dollar into 127 or so. Okay, so this is how it is looking right now. If I go to Euro USD for a second. On Euro USD, if you remember, this is the analysis that I gave you on here as well as in our Telegram group. If this line was going to get held, then the market was going to fall to this, and this was our real target. Now, the market has reached those targets, and it has been very good trade if you had taken that swing position. Now, this bounce here is nothing but a bounce from 1.0, which is basically parity, right? Euro dollar reached the parity level. Euro dollar has reached 1. So it is quite expected that market will bounce up, because a lot of people will think that this is a very important level and the market should bounce up, and it did for a few days or so. But you see, what is happening here is that market has come back into this FCP zone, which I posted a few months ago, and now it is getting consolidated here. Now, before it can go higher, there is still a chance that it can form an M pattern here, which can be this M pattern or an extended one. Okay, and then it can go back up. So what I'm expecting is that market can actually come back down in coming week or so in Euro USD, retest that 1.0 level, or even go lower than that, create a divergence, and then come back up. However, if I go look at the higher time frame move, there is still a possibility. Let me go to the monthly time frame, then I'll show you what I can see here on higher time frame. In fact, let's go to 3 months move. So 3 month structure. So what I can see here, if I just hide this, what I can see that market is still creating an M pattern. And what it has done, it has actually just broken through the midpoint. So whatever the bullish momentum comes in here for a few months or so, that may be a temporary move. So if even if the euro goes up, other currencies go up and dollar comes down, there is still a possibility that market goes up and then starts to fall to complete that M pattern. So euro can still fall to zero point 0.9. Actually, let me give better levels here. So it can still fall to near about here, near about zero point 0.9. Actually, that should be this one, 0.93214. But when we will reach there, I will have better visibility on exact levels. But right now, this is a very good zone that I'm looking at. And this zone is between, let me put a line there so that you can see. By the way, I'm going to post these charts in the Telegram group as well. So what I'm expecting market to do is, if it continues to fall below 1.0, right, that parity level, then it can come down to this FCP zone, which is between 0.9916 and 0.97169. Now, I'm looking at 3-month time frame, right? That is why that zone is wider. If I go to the weekly time frame, this is how it can happen. The market is still there in the FCP zone, and if it starts to fall, then it is expected to go below that 1.0, because it is going to collect the stop losses which are beyond this previous low here. A lot of people have gone long because of 1.0 and they put their stop losses here. So there can be a move down to collect the stop losses, touch this FCP zone, and then go back up. So that is quite a possibility. So if euro is going to fall down, which that means DXY is supposed to go up, which we can already see that market could actually respect that trend line that we were talking about, right? So this is what we have on DXY. If you enjoyed this analysis, found this useful in any form, make sure to hit the button and support this channel and support this video. Your support is the only thing which keeps these videos coming, right? And remain free. So your support is absolutely essential, and I'll see you in the next one. Have a great trading week.